Well, hello everybody, welcome to the Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a developer of NPS software. In today's video I want to talk about this cipher pattern that is on your screens. Also New Zealand 1 hour time frame. I will be showing you the identification part, execution part and trade management part. Well, let us start. First of all, how we do identify the cipher, and to draw it I will switch that off so no patterns are drawn. So right now price action is looking kind of messy, so you don't know what is this. First of all, you should decide what is your first swing, second swing, third swing and swing number 4. And to decide that, you need to use a swing identification algorithm. My software was running the swing identification algorithm that finds the extreme high or extreme low somewhere between the predefined period of candles. They are 10 candles or whatever candles. It depends on what you set. Just go to settings and set this conditions that you like. So my period is 10. Now let's continue. Once you identified your first movement, it all starts with the first movement. If you don't know how to identify the first movement, what you are going to measure? It is very good question. And I've seen that very many times that people are trying to measure something. They're trying to memorize the Fibonacci ratios needed for cipher identification, and they don't know what is the swings identification, how to draw the swings. Okay, so you found the swing, you draw Fibonacci's from the swing high to swing low, and you look at the retracement. So the rules for the cipher pattern are as follows. So the minimum retracement should be at least 38.2. It means that price should at least touch this 38.2 with this candle high or whatever price. Yes. And the maximal requirement has no value. So the wick of the candle can extend to whatever level. So there is no maximal requirement. But there is a second half of this criteria, that the close of the candle should not touch 786. So how do you know that the close doesn't touch 786? First of all, you should enable 786 in your Fibonacci. Let me add this as 618, sorry, not 786, 618. 61.8% dollar. The candle close should not touch the 618. So if the candle wick touches this 618, the pattern is valid. But if the candle close touches the 618, it is not valid. So what is the fast way for you to understand that the candle close doesn't touch the 618? Simply switch to line chart. If the line chart does not touch 618, then most likely it is valid. Then switch back. Next, what you need to do, you need to measure your C point. The C point is an extension, and you need to measure the extension of X to A. Using standard Fibonacci tool, you simply need to inverse that, and your extension will go lower. So your first extension level, the price should at least touch 127, and it should not close beyond 1414. The same principle here. So whatever price, it should touch 1 pip or whatever, 127. But if you switch to line chart, it should not go and touch 1414. This is very important, that the close price, the wick of the candle, can go and spike that 1414, 1786 or 618 or I don't know, to whatever level. It has no maximal requirement, but the line chart does not. Okay, so once these 2 points established, criteria 1, criteria 2, by the way, you should not mix up the rules of the cipher pattern with a shark pattern. The shark pattern extension, the C point, yes, it is the extension of AB leg. So it stays within the 113 to 161A of A to B. You see this? But the cipher is the extension of X to A. they are different, although they may coincide in sometimes, but they are different. Okay, once you identified them all, stretch your fibs from the highest high of your cipher to the lowest low. It means that you stretch that to measure the total range of the pattern, and 786 is your entry. Right now the 786 is 0.8667. Okay, of course I could do it much faster using my, let's say, manual algorithm. Why not? Why not to use the manual algorithm? Simply just enable whatever patterns that I'm looking at, and it is drawn this way. So I'd like to check if the pattern I'm looking at is a valid pattern or not, and it is very simple to check it using manually algorithm, not to stretch the fibs all the time. Okay, and once again, guys, you first of all need to understand what are your swings. If your swing identification algorithm, if you suppose that this movement is this way, yes, like this, it is not a straight movement, then you don't have a valid cipher in front of you. If your swing identification says that this movement moves this, but if your swing identification says that you can ignore it and consider this movement to be straight, then this is a valid cipher. One swing here, one swing here, one swing here, all those swings and one swing here are based on your swing identification algorithm. Okay, perfect. Now let's go back. Let me switch that to automatic swing identification. Enable on. Here is the cipher. And watch the video attentively starting from this point, because I'm going to give you something that will be an eye-opening experience to you. First of all, the conventional rules of cipher pattern trading say that you should stretch your fibs from this to this to 786, and you should set your target at 3.2 and your stop loss as, in majority of cases, 113, but it is said that above X, 10 pips above X, 1 ATR above X, or whatever. If you set 1 ATR above X, it will coincide in majority of cases, it will coincide with 113. Okay, I will use 113 because it is very simple to calculate. You don't need ATRs, you don't need anything else. One of the most popular ways of setting the stop loss. It is above X, and we have the buffer needed for price to sink and to reverse. Well, what you will have if you place your order this way. So the risk to reward will be 0.87. So I will tell you the exact number if I go to open my risk to reward Excel spreadsheet. So it shows, depending on where the reversal takes place, exactly, if it takes place exactly at 786, just touch and reverse, yes, very rare situation, but sometimes it happens, you will have the risk to reward of 0.87, 28 and 3. So what it means, if you consider your risk being 1, your reward is 0.87 of that 1. So if you consider being 1%, then it is 0.87%. If you consider that $1, then it is 87 cents. Yes? And the like. Okay, so the rules of management, of trade management, say if price goes deeper, you need to adjust your Fibonacci. And if it goes even deeper, you need to adjust it more. If it goes even deeper, you need to adjust it more. And you should do this adjustment all the way to the upside until you finally hit the reversal. Yes? When the reversal starts, you keep your Fibonacci in this place. Okay, and what it results to? It results in this target being less and less and less. Right now we have 17 pips versus 39 and something. Okay, and my risk to reward table says, where is this risk to reward table, that if it goes closer to 886, your reward becomes 0.69. If it goes even closer to X, it becomes 0.54. If it goes to 1, it becomes 0.47, and so on and so forth. So let's calculate the average risk to reward. Why not? Average risk to reward. I will do it very simple. I will use the formula average. Average. So what is the range? This is the range. That's it. So your average risk to reward is 0.56. Well, we should consider that we think that we have the same probability of price to reverse in whatever point, but it's not exactly true. We have a higher probability of price to reverse in the first third of this potential reversal zone. Then we have a less probability that price will go and reverse here, and we have the smallest probability that we will have a reversal here. And basically, based on this, the average risk to reward is not exactly 0.56. It is 0.67. It is a very time-consuming calculation to demonstrate you how how you come up with this number, but it is 0.67. Let me use this label, 0.67, and let this be white. Okay, this is the average risk to reward for a cipher pattern. Okay, once we know your average risk to reward, so how often we should win to at least stay break-even. That's why I have created this empty Excel spreadsheet to do the calculation. So we need to know these numbers. We need to know how often we win probability, how often we lose, loss probability, and we need to know the risk to reward. The risk to reward is actually what we win compared to what we lost. So if we consider a loss being 1, the risk to reward of 0.87, 0.61a, or whatever is something that we compare to 1. Okay, and then we will calculate the expectancy. The expectancy is something that what we expect placing a trade. If this is positive, yes, then we will generate money in the long run. If this is negative, then this means that we will lose money in the long run. Okay, if you don't know the expectancy of your trading strategy, then you are not a trader, you are a gambler. You are gambling. You don't know what you expect. Simply believing somebody watching YouTube videos, reading the books is not the way out. There are so many scams out there. Everybody is trying to generate money selling trading courses, so they actually can tell you whatever you want to hear to take your money away from you. So it is this. This is the reality. So if you simply trust somebody who told you that it is this and that, you are a gambler. You don't know what to expect. The only way to find it out, to do your own backtesting, to do your own market research. Okay, based on my market research, the cipher pattern is this, 0.67. Well, it shouldn't be percentage, it should be number. I will go to number format. Okay. Once we have it, it should be 0.67. This is the risk to reward. Well, let's suppose we win somewhere 70% of the time, yes? So our win is 0.7 probability of win, and our loss equals 1 minus this. Very simple, yes? 0.3. Now let's make it a percentage. And the expectancy should be this. Okay, the true formula for this. Let us calculate the total scope of what we have won. So we had 100 trades, for example, 70 of them were winners. So each and every time we win 0.67. Okay, let's do it this way. Risk to reward multiplied percent of win. Yes. And now to know if we generate money in a long run, we need to detract our losses. So minus this loss and what we lose. Yes, minus what we lose. We lose 1. Each and every time we lose 1. So you see the expectancy in this case is 0.17. See it? C2 multiplied A2 minus B2 multiplied 1. We don't need 1 because we know that it gives the same. So the expectancy for this trading strategy is 0.17 if it is, very important, if it is 70% accurate. Okay guys, now there is a question. What is the cipher pattern probability? Sorry. What is the cipher pattern probability? What is the probability of cipher pattern to hit the winner? Let's think the winner to be, don't save. Let us think the winner to be this 382 first target. What is the probability that the cipher somewhere within this zone from here to here will hit this 382? What do your backtesting say? Okay, I know that the creator of Cypher says that it is 80% accurate. I know that they say this, but it's not the reality. Well, based on my market research, first of all, let's agree about this. When you do your market research, when you do your backtesting, what are you expecting to find? For example, somebody's telling you that the cipher pattern is 80% accurate. You say, wow, but I need to check it. And you are going to check it. And when you are checking your strategy, you are bearing in mind that it is a winning strategy, yes? If you bear this in mind, you already have a belief that the strategy is a winning strategy. Otherwise, if it is not a winning strategy, you're simply wasting your time. Nobody will do the backtesting of a strategy if he knows in advance that it will be a losing strategy. Nobody will do this. Nobody will do the backtesting of that. I would say 90% of traders in quotes that are basically gamblers never do the backtesting even knowing that the strategy is a winning strategy. Why do you need to do the backtest? You already know there is a winning strategy. You see this? Okay, the backtesting, the market research gives you a very, very clear view of things. First of all, you don't trust those who tell you that this wins and this losses. Next, you understand that you are the only one who is responsible for your actions. So if you do the backtesting on your own, you will take the responsibility for your own actions. You don't believe somebody, you do what you know, you do what you are confident in. Then, of course, you acquire that confidence. Next, you acquire the statistical data that is produced when you use your own method of identification. And this is very important because in majority of cases, you can see how many swing identification algorithms I have here. Yes? If I switch to some other swing identification, we can have no pattern here. So, well, who knows? maybe the cipher pattern is 80% accurate if you use that very weird swing identification algorithm, but I'd rather say that it is a kind of I don't know how to say it. I don't know how to explain this stuff, that it is a good stuff to advocate yourself when somebody is telling you that cipher is not 80% accurate. It is a good stuff to protect yourself. What was your swing identification? How you defined your swings? If you would define them this way, they would be that. If you would define them this way, maybe you were defining your swings wrong way. So I say it doesn't matter how you define your swings. I tried many of them, and not only I was switching the type of swing identification, I was switching the period of swing identifications. So to detect minor ciphers, medium ciphers, large ciphers, I've been doing that so many years, and I am a backtesting maniac, and that was the main reason why I have created that software. By the way, you can find the link in the description to get it. So simply look what it does. You go back into history and you simply calculate how many ciphers you have, how many ciphers win, how many ciphers lose. Yes, you can switch to whatever algorithm and you continue doing the same. Yes, how many ciphers win, how many ciphers lose based on some other algorithm. See this? Very simple. And of course you can go to your you can go to your settings and you specify each and every algorithm. Set your period, overbought, oversold, if it is, in case it is an oscillator based algorithm, or set your period and high and low. You can even use the close price. It is one of the most important stuff. Even use the close price. For example, you use the line chart only. Let me enable the patterns that way currently use. Yes, so you can even use it this way, using the line chart, old school way of trading based on close price. Close price is the most important. So if you base your swings on a close price, it is another way. I don't say that it is an ultimate way of doing something, but it is another way. Okay, I did them all. I created these all algorithms and I did the backtesting. So I will share you the backtest results for Cypher pattern in a minute or two. And before that, let's continue with calculation of a Cypher pattern expectancy. Okay, so if the expectancy is 80%, then you will have at 0.34. This is a good expectancy if the Cypher pattern wins 80% of time. And now what I promised to you is to give you the Cypher pattern accuracy. I will open my backtesting Excel spreadsheet. Okay, let's go to the first pair. These are the backtest results using this software that finds this. You can see that the algorithm is pretty good, especially this price extreme algorithm. It coincides with major turns, the highs and lows, so the probability that you miss some ciphers is very small. So the probability that you will not detect something is very small. And the probability that you detect something that mismatches highs and lows is also very small. Okay, so I did the back test on 4 hour and 1 hour. Let's go here, not here, this one. On 4 hour and 1 hour on a period from 1999 and in 2017. Yes, it was 2017. And I found the number of winners, number of losses, number of setups. If we do the backtest of this 18 years of backtesting, yes, and what is the large cipher and the medium cipher? It is simply this swing identification algorithm, but when you switch this in settings, you change the period. Right now I am running period of 10, but when I've been doing this market research, The medium ciphers were running period of 8 like this. So you see the detected minus ciphers, smaller. And the larger cipher was running period of, where is this? Come on, highest high was of 12. That was large cipher, large pattern. So you see, this is the one we have right now is the large one. Okay. Every time I change the settings, you see, because my godlies and bytes were true in settings, they are transmitted to my graphic panel as well. So if I wish to switch them off, I need to switch them off in the settings as well. So I need to go here and switch them off. Next time, if I don't use them, next time I don't have them. Okay. Okay. Close it. Close it. And need to have custom pattern. This one. True. Okay, you see this? Appeared. Every time I switch settings, they are transmitted to my graphic panel, and starting from that, I use the controls using that graphical panel, graphic interface. Okay, so I did it two ways. I backtested small ones, medium ones, I backtested large ones, and this covers, my result covers pretty large scope of those ciphers. It is very hard to tell me that, very hard to prove that, you know what, you were looking at those large ciphers, you should be looking at the minor ones, or you know what, you were looking at those minor ciphers, you should be looking at the larger ones, and so on and so forth. So it is very hard for somebody to prove that I was doing something wrong. Patterns were found out absolutely automatically. The software doesn't draw patterns that fit the history. It draws patterns based on 1, 2, 3, and 4 points, and point number 5 is calculated. It never coincides with price. It is not something that was taken from the chart. Okay, I think I should switch back to 10. Okay. I use 10 to have that something in the middle between medium and large that I was using previously. Okay. And also I found that those round numbers like 10, 20, they have a great significance for people's brain, for people thinking, and that's why they work better. Okay, what I was talking about is the cipher pattern probability. What is the probability for price to cross this and consequently have a stop loss, or to give you a trade to at least? So let's go to have this backtesting result. First of all, I found 22 medium ciphers and 13 large ciphers on 1 hour. So total, they are 13 plus 22, they are 35 total ciphers, if we consider them together. And larger ciphers were working better, 67%, and smaller ciphers were not working good. Okay, as for 1 hour ciphers, found a bit more ciphers, 49 and 61, more precise statistics, but not yet enough, of course. Should be 100 at least, and it says 60 and 48. Okay, for Aussie Canada, I'd say my conclusion is this: you know what, it's not enough data to judge. So when you have doubts, stay out from this pair. Don't trade ciphers on this pair at all. Let's go to Aussie Yen. A bit larger number of them on 4 hour and 4 hour medium. So we have 22 and 29, they are 40, 51. A bit more precise, but not enough. And it says 68 and 87 on Aussie Yen. Well, the results are pretty good, but 50 trades not enough. As I told you, the sample size of 100 would be very good. Okay, and let us look at this. The cipher, large cipher is 55 on Aussie yen, and medium cipher 115 samples, and 69 is 64. So if we unite them together, so how many ciphers found on total large and medium, whatever? Yes, they are 179 plus 5, 184 total setups, and 55 and 64, the average range of that is, well, it is below 60, I suppose. 55 plus 64 divided 2, it equals 59. Okay, now let's go Aussie yen. We have enough sample size. Let's go here. Let's go to this. 59. The probability, the average probability for ciphers, large or medium on Aussie yen, 1 hour time frame. Whoa, shouldn't trade them. Don't trade ciphers on 1 hour with limit orders. Okay, Aussie dollar, same stuff here. So I won't take about this 4 hour because the number of setups is not very much. On 18 years it is impossible to find so many ciphers. On the 4 hour time frame, I mean. Okay, 1 hour, 78 and 175. So it is 240, 250, 47, 65. Yes, so what is the average? Average 47 plus 65 divided 2. The average is 56, worse than the previous one. Don't trade ciphers on this pair. Okay, 56 and 57. Okay, it is below 60, so we know that it is negative expectancy. 68 and 56. Okay, needs to calculate. 68 and 56. 68 plus 56 divided 2, so it is 62. Will we generate something if we trade it this way? 62% probability, slightly above break-even, slightly above water. But if you consider spreads, commissions, swaps, withdrawal fees and taxes, you will be losing money on this very strategy. Okay, let's go next. 58 and 60. Losing money below 60. The average will stay below 60. Let's go next. 52, 54, obviously negative expectancy. 59, 53, obviously negative expectancy. 57, 54, negative expectancy. 48, 68, negative expectancy as well. So guys, I did my back test using this software, using different swing identification algorithms. So it is very hard to prove me that I was subjective in my back testing. Yes? And the fact that the creators of a cipher pattern say that the pattern is 80% accuracy is, I'd say, very much exaggerated. There may be two reasons for that. First of all, the creator of a cipher pattern, Darren Oglesby, yes, the creator of a cipher pattern, was so excited when he created this pattern, and he found few patterns, and he noticed some repeatable pattern, that something repeats again and again and again, and he was so excited that he discovered something new. Yes, and that based on few examples, he had that 80% accurate, and he came to his teacher, his mentor, Jason Stapleton, and he was saying to him, you know what, this appears again and again, and it is 80% accurate. And Jason Stapleton said, you should find at least 100 on one time frame, and then you go on one pair, yes, and then you go with your results, and we will talk. So Darren Oglesby went back to back testing, and he was looking for ciphers for 100 setups. But imagine what happened in his mind. He already knew his pattern is a winning pattern of 80% accuracy. He already believed in that. And while doing the back testing, when you do something and the belief has the demand of expression, and the belief demands confirmation. It is inevitable. If you believe in God, you will try to prove to others that God exists. Because you simply believe in it. If you believe that dogs are angry, you will be frightened to death every time you meet a dog. Even if the dog is wagering its tail, showing you his friendly intentions, you will be frightened to death because you believe that dogs are angry and they are going to bite you, no matter what. You will have that adrenaline in your blood. Your belief affects your physical states. Yes? So the same with backtesting. When you do and you bear in mind that you have a winning strategy, subconsciously you will be looking mostly for winners because you are going to prove that this is true. You are going to confirm your belief. All wars on earth start with conflict of beliefs. All wars. Hitler was believing that the Germans have I don't know. The German race is better than the Jewish one. Yes, the Germans are better than Jewish, and he believed that. And that's why he was killing them all. Simply because of this belief. He was believing in it. Other words, I don't know, in Middle Ages, there was a belief that those who don't believe in God is a witch or a sorcerer, and we might burn them on fire, yes? Set them on fire and burn them, all the sorcerers and witches. So it is simply a matter of belief. If your belief conflicts to some other belief, you will be fighting to death to protect your belief. Even if this belief is not actual true, if it is not actual reality. We know that all people are equal, and if somebody is thinking that one race is higher than some other race, he's a racist. And if somebody is thinking that one nation is higher than some other nation, he's a nationalist. So the Hitler was a nationalist, and that's why he started that war, to kill all those of lower nations. Yes, he supposed that they are lower, but they are equal. In fact, all people are equal. No one is smarter, no one is more stupid, no one is better than somebody else. Okay, so now you understand the power of belief. You will be fighting to death to prove somebody that your belief is working. So what Darren Oglesby did, he was thinking of this cipher pattern, that he's working. He was excited that his pattern, he created a new pattern. Just imagine that feeling, yes? Imagine that thinking process. And you do the back test and you're trying to prove to Jason Stapleton that it works. And you find mostly winners, winners, and winners. And when you come up with those results, you give it to him and you say, Jason, you know what? I have found 100 examples on Eurodollar, I found 100 examples on Pound Dollar, I found 100 examples on Aussie Dollar, and they all say that it is not 86% as I told you previously, it is 85%. You were right. So the Jason Stapleton was simply amazed when Darren Oglesby shown these results. And he also started to believe in this pattern. And when Jason Stapleton did his own back testing, he already had the same belief that, well, a buddy of mine Darren discovered this pattern, and this pattern is working 85% of time, not 86 as he claimed in the beginning, but 85. He did the backtest and he found 300 examples. He found 300 setups, and yes, they are working 86. So let me do my own backtesting to find some to check them on this history. And when Jason Stapleton did the backtesting, he simply proved that belief. When Akil Stokes did the backtesting, he already had this belief. When Jason Greystone did the backtesting of Cyphers, he already had the same belief. Because when you do the backtest, you start from the starting point. Your starting point is this: the strategy is working. So when you do the backtest, you are trying to prove that the strategy is working. You're trying to confirm that it is working. Even if you will be trying to look mostly at your losses, at losers, to find as many losers as possible to prove that the strategy is not working, subconsciously, you will simply try to find those that are working. Subconsciously, you will be simply noticing those that are working. And the reason for that is subjective swing identification algorithm. This is the only reason. So somebody will draw the cipher this way, somebody will draw the cipher some different way. Not because the different ratio analysis. The ratio analysis is the same. So you compare the swings, compare the ratios, it is strict, black and white. But what is subjective is this swing identification. So the starting point, it is something that's subjective. And when I say that ciphers are not 80% accurate, well, in majority of cases, I am answered back that, well, how do you define your swings? You define the swings wrong way. Do you identify swings mechanically with a swing identification algorithm? Well, you know what? It doesn't work. If you will identify swings the special way that I do, using my eyes only, then you will have that 80% accuracy. This is the sacred swing identification technique. This is the secret something. And to know how exactly I do identify the swings, you need to buy my trading course. This is the policy of mentors policy. Well, guys, I'm not hiding anything from you. So objectively, the cipher pattern is not working exactly with these rules. Set and forget method, limit order trading is not working this way. But guys, doing that backtesting, I didn't waste my time. I was trying to find a way the conditions under when it is working. First of all, I found that if this swing is straight, if the second swing is straight, the third swing is straight, and swing number 4 is straight, if this all 4 legs, 1, 2, 3, and 4 are straight, then the pattern is 80% accurate. 80% probability on all the pairs, some of them 59, some of them 62, but in majority of cases it is stable. So if you remember my backtesting results here, backtesting pro, yes, so there is very large scope of that variety, yes. Some of them 47, 60, they are very different. They are not stable, they are not consistent result, yes. It looks like random. But if these swings are straight according to your swing identification algorithm, I repeat that once again, according to your swing identification algorithm. So if you decide this to be 3 swings, 1, 2, 3, then it is not a valid cipher for you. If these swings are straight, if these movements are straight, then it becomes stable. It is 60%. But obviously that's not enough to give you an edge over the market, over other market participants. It is not enough. Okay, so I did the following. First of all, if we have a 60% probability of price to reverse somewhere within this range, yes, Well, if I simply place a limit order here, I will be executed at the worst price possible, yes? And there is no guarantee that price will ever reverse. So if we have a 60% accuracy, if we have a 60% probability of price to reverse somewhere within here, why not to wait for the starting of that reversal? For example, the reversal will start here, and I wait for some reversal candle, something like this. If we have a 60% reversal, the fact, if I have a reversal candle, yes, the probability of that this reversal will continue, and consequently it will end up being that reversal out of those 60%, yes, it increases radically. I'm looking for a confirmation. That's it. And second, if I enter higher, consistently enter higher, I am limiting my loss if compared to my reward. Okay, so based on this technique, I will tell you how I exactly execute my trades. Based on this stuff, I came up to this conclusion. So first of all, I created a special indicator that is analyzing the price action, and this indicator is called tail close, something like this. So suppose this is the range of the candle from here to here. 0 is your low, 100 is your high, and if the candle closes in percentage, yes, from 0 to 100. So if the candle closes below 20, it means that it is a powerful bearish close. If it closes below 80, it means that we have a powerful bullish close. If it closes in the middle, then it is indecision candle or a range candle. Now let's go next. So it all depends on the direction. Yes. Okay, so this is the direction, previous direction. It is here. So I'm looking at a reversal candle that will look this way here, and the candle close of this candle should be in the bottom 20%. It will be a bearish close. It doesn't matter where the open is. So for example, this candles, yes, if the open is here, what is this pattern? Inverted hammer, shooting star, or pin bar, whatever you call it. For me, it is a powerful bearish close. If the pattern is here, what is this pattern? Yes, one-day reversal candle, or it is an engulfing candle, if it looks this way, depending on previous candles, or it may be a dark cloud cover, candlestick formation, if it looks this way. Depending on previous, you can create different names for that. It all depends on previous price action, yes. But for me, it is still powerful bearish candle. And it doesn't matter. No need to complicate stuff. It is very simple. If it closes in this middle, it should be red, of course, because I'm looking at something that is red. Red means that price trended from open towards close, and it signals that the movement started. Okay, what we have right now here, based on this price action, let me first get rid of this. Based on this price action, simply analyze this price action based on powerful close. Yes. What is this? This is an indecision candle. Yes. As we go here, this is a resistance, an indecision candle, because it closes in the middle. So the market participant don't know what will happen, and price retraces back. And after that, after it retraces back, look at this close. The close is powerful bullish close because it in the top 20%. Yes? So what happens next? We have a very nice trend bar. The trend bar is a bar when price trended from open to close. We have a kind of trend. It is a bar with a pretty good body. When we have this bar, this is a trend bar. After that, we hit this completion. So maybe cipher pattern traders, maybe some other guys who are looking at that level, 786 retracement of that, they're starting to sell it, yes, and the selling pressure increased. So that's why we had this larger wick, and that's why, although we have this trending bar, yes, it is not very powerful bullish close. It is not top 20%, it may be top 30%. This powerful, not very powerful bullish close. After that, we have a range bar. When I say a range bar, it is the bar that didn't trend somewhere, starting from open and in the close. So it is something that trended in the middle. If you go to lower time frames, you will see it this way. This bar somewhere on 5-minute or 1-minute time frame will be looking this way. You start here, go higher, higher, then, and you end here. So it is the range bar. You started from this, you ended this. So this is the range. And what happens when the range is broken? Boom. What happens? Continuation happens when the range is broken. So on a lower time frame, it may look at like this stuff. Very simple price action analysis based on this candle close. If this candle close is closing with a powerful bullish close above this, yes, odds are in the favor that we will go higher. What is the point, the next point of that? If we have broken this, this was a resistance, yes, we also broke that another resistance of 786 level, yes, that was this one. I suppose it was this one. So let me put this horizontal line. So initially we broke this, then we broke this. If we break and close, we didn't break it from the very beginning. Then we established a range bar, and this range bar was a almost powerful bullish close, but I don't know it yet. Let me. It was not a powerful bullish close, it was an indecision close. Something like this, range close, indecision close, not above 80. So if next one is a powerful bullish close, and it is above this level of support resistance, then most likely we will come to next one. And if this does not hold, yes, most likely we will come to next one. What is the next one? Somewhere here. Maybe this consolidation, maybe this high. This high, intermediate high, something like that. Then most likely to next one, most likely to next one, until somewhere price will find a resistance. So you simply look at this price action, looking left, and if this is broken, don't execute it at market. Wait for price action to give you a reversal first. If it is broken, the execution will take place here. Most likely the execution will take place after testing this level. I can't say that it will do for sure. Most likely it will test this. If this candle closes with a powerful bullish close above this high, above this level of resistance. So you see this? Simple price action analysis, and the cipher pattern is only used here to identify a potential reversal zone, to identify support resistance zone, to identify a high probability zone. When I say high probability, it means that we have a 60% probability that it will give us a reversal rather than it will cross that. But it all depends where the reversal will take place. It all depends. Sometimes, in majority of cases, of course, it reverses right off this level. I'd say 53% of reversal take place in the first third of the zone, 30% of reversal take place in the middle part of the zone, and only 17% of reversal take place if price exceeds the X. Only 17% of reversals. So very low percentage of reversal take place here. So many traders trade ciphers only within this range. So if it crosses that, then it is not valid, because the probability of a reversal to happen here is very, very low. But it doesn't matter if you look for a reversal, if you don't anticipate a reversal, if you follow the reversal when the reversal starts, then there is a very high probability that it is one of those reversals, one of those 60% of reversals that take place within this range. And what this approach gives you, this approach is filtering those losses that are straight through the zone. Filter this. This approach gives you better risk to reward and higher probability of a reversal. Okay, with this approach, the average risk to reward turns into 1.30, and the win percentage increases 5%. And this way the expectancy turns in 0.50. You see? So this way, if traded this way, don't save it. If traded this way, ciphers are profitable. They are very, very profitable. But if traded with limit orders, simply setting a limit order at completion zone, yes, because of target adjustment and some other factors, it will be not as profitable. It will be not profitable at all. So keep this in mind. Don't believe my words. Do your own backtesting. If you don't do the backtesting, remember, if you didn't do the backtesting, you are a gambler. You don't know the expectancy. If you don't know the expectancy, you're gambling. You are guessing. Believing somebody is not something that you should trust, because when somebody is trying to teach you, especially selling the trading courses, well, why? If you can generate so much money trading only, why are you trying to sell me the trading course? So at least it looks suspicious. Okay, if you guys are interested in my software, you are welcome to visit my website www.ps-software.net. Here it is on the homepage. The software is explained. Well, I want you to give this weapon, this software, because it is a powerful tool for analysis, for market research. I think every professional trader should have this if you're looking for trading these patterns. Yes? So it will save you plenty of time if you simply do the backtest, not manually, but using the software. And you may be sure that you were absolutely objective. You can be sure that what you found is not anyhow affected by your beliefs. You are absolutely objective. Very cool stuff. Okay, if you are not interested in the software and you still advocate the manual identification, I say, based on your eyes, discretionary strategy, yes, discretionary identification, you can simply use my website as a reference for these patterns. They are the conventional one, traditional one. So if you go to the Cypher advanced formation, you will be given the identification rules, you will be given the execution, the management rules, and they are all free for you. You need no pay for anything. This trading course is absolutely free, and once you learn this by heart, you can do the back test and you can perform those ciphers the way the professionals do. You can draw them the same way. especially when you have some rule-based swing identification technique. Well, that's it for today. Keep an eye for this cipher. As I told you, if we break and close, then most likely we will move higher, and we'll have 17 minutes left till this candle close. Until then, good luck and good trading. Hope to see you soon.